For more here, let's bring in Keith Fitz-Gerald, principal at the Fitz-Gerald Group. Keith, welcome. Good to have you with us. When you say liquidity is something that we should be paying more attention to, why do you say that? Are you concerned about a lack of liquidity in the market, or what?
Well, it's actually an interesting contradiction. It's the opposite. I'm concerned about the amount of money that's in the markets. Not the classic sense of the term or the definition that matters. It's how fast and how far people can leverage up or deleverage as rates come and go. It's become a very sophisticated, computerized-driven marketplace that poses a lot more risk to the average investor than people understand.
So how do I get my hands around that if I'm an average investor? What should I be watching specifically?
Well, it's ironic because this is the greatest opportunity I've seen in the last 30 years. You have the opportunity as an investor to focus on the basics. You can get a very short list of great companies putting up great numbers. When in doubt, zoom out is an expression we use with our folks around the world. And I really mean it, because if you engage in battles, Wall Street cannot pick you off. If you are an investor, you stick to your numbers, you're disciplined, you're calm, you take a deep breath. The day-to-day noise is not going to bother you when it comes to a great company like Apple or Microsoft or Nvidia or McDonald's even. They're going to put up numbers. As an investor, over time, that's going to work in your favor.
Let's go through a couple of those companies that you call great companies that have been doing very well. McDonald's is one of them.
It is. And, you know, it was off my buy list for a long time, but it's recently back on it. I've just picked up additional shares personally. This is a technology company that happens to make hamburgers. Every kiosk they put in improves their order, their accuracy, their square foot profits. You know, the fact that they're growing sales internationally, there's a long way to go with this one. And it's a sign that the consumer is actually very, very strong.
And Nvidia, which is really a market darling right now.
Well, it is, but it's also a long-term favorite when you think about the themes that we're living through in today's world. AI is not going back in the bottle. It is at an inflection point. I think we're going to see this develop on par with the introduction of penicillin, the introduction of electricity, distributed generation. This is the kind of stock where they control 80 to 90% of the marketplace in their respective areas. So this is a company that I think a few years down the road, investors who don't own it are going to be kicking themselves.
You say the Fed is fundamentally kind of irrelevant in this market. What makes you come to that? I don't know whether I'm overstating what you are saying, but what makes you come to that conclusion?
Well, again, the Fed is clearly got a tough job on its hands, but I maintain that they are as wrong about rates and labor as they were about transitory to begin with. The reason why I say they're a non-starter is that the markets have taken matters into their own hands. The liquidity that I spoke of has nothing to do with what the Fed is doing. The Fed can raise rates until the cows come home, as evident by the GDP report this morning, and still not fix the problem. This is a fiscal issue that stems from the other side of the government.
Yeah, and the Fed is I guess you would say, pulling back on liquidity to the extent that they're selling off securities and reducing their balance sheet.
Yeah, they are. And, you know, again, that's the sort of classic economic model. But the liquidity that I'm concerned about from an investing standpoint is the use of leverage by high-speed, low-drag, computerized traders, dark pools, et cetera. The rise of passive investing, funny enough, has contributed to this because every time there's a major change in rates, many of the leverage traders have to either buy or sell to avoid their margin calls. And that screws with all of the markets.
All right, Keith, thank you very much. Joining us on the phone today, Keith Fitz-Gerald.